guys, welcome to the Saving Money Show. Me, your host Sean. Today we're discussing my speculative and growth stocks for 2021. Why have I mixed them together? Well, the response I got from my penny stocks, I thought each one of these I've done a video on. So I'll just speak about the ticker symbols and then we'll speak about my favourite ones. Now, I hope you enjoy them. Please hit like and comment box and subscribe if you haven't. If there's any videos you're looking for me to do, please drop it in the box below. Don't forget to check out links in the description below. I'll see you in. Now, tattooed chef. I had to do a chef because look, I've been banging on about it when no one was listening. I was in at $10 a share, and when it ran up, you know, at $20, I sold out my initial investment. Came back down again. I went back in, and then it went back up again. $25. I came out. It went back down again. I went back in. And I just loaded and loaded and loaded the boat. I mean, I loaded down here, but then I kept loading up as it was going up. The more I saw about this company, the more I loved it. Now, and the more people like Jeremy and others were throwing companies like Very Good Food Company to me and Beyond Meat, and I was batting away. I was buying more of this company up. Why? Because I was saying to them, hold on, in order to get these contracts, Beyond Meat was losing money to take bigger market share. Yeah, but they're taking market share. Yes, but they're getting a trial contract with a company, and once that trial ends, they're losing money during the trial, and once that trial ends, they're not getting the contract renewed. They are with some of them, but a lot of them they wasn't. And Very Good Food Company, great growth, yeah, paying YouTubers to promote them, yeah, okay. And then when they come down to it, Tattooed Chef, 6 times the revenue, and had all the contracts, but double the price at the time. You know, didn't make sense. And you can see here, yeah. Now, the thing is, everyone goes on about Sam Galletti and the board and the experience in the food industry, and that is invaluable. But the real one who's invaluable is Miss Galletti, the tattooed chef herself, who's the creative genius behind it. And they have started their e-commerce, and look at this, true farm to table. Now, not only, Sarah Galletti, and for those of you who start, they don't reply to our emails or that, they receive millions of emails, and no offence, when I contacted them on Instagram, almost instantly Surrogate replied to me twice. And I was surprised at that because they're so busy. Now, I didn't expect them to. Now, you have a look at the products they have. This is the number one product, the ASO bowl, because apparently it's beating the number one competitor, blowing them out of the water. And when you can do that, well, there's so much you can do. You just have to go to get your salespeople to go and say, oh, we're blowing the number one competitor out of the water, and they will put you into trial. Now it says here all products, but this isn't all the products. They have a lot more. This is just for the e-commerce site. Now, let's see if I can get this working. While it is, we can talk about guidance. Now, 2021. Now, I think they're low on this guidance. I think you can knock a year off the $1 billion one. And you notice there they say no acquisitions included in 2021 guidance. Well, I think if you remember, I spoke about how I'm putting in the wrong information. I didn't put in my details. I said before how they said how they were looking to acquire a company. So imagine they acquired the right company, and that will just fast track it. Now, so Tattoo Chef is definitely on the list. Dropbox, I've already said about Dropbox. I've done my video, and you all know what. Hi guys, little plug here. Don't forget to hit that lovely like button and smash that sexy subscribe button. A lot sexier than me, trust me, ask the wife. Don't forget to comment in the box below. If you're looking for a free trading platform which to trade your stocks and shares, why not check out the links in the description below. Freetrade are doing a promotion at the moment where if you sign up before the end of the year, you'll be entered into a free draw for what they call a stock hamper, where you can earn a Shopify, a Nike and a load of other stocks. So why not? Doesn't cost anything. Just click the link, deposit £100, £100 and start investing. Anyway, let's get back to the video. Workhorse Group. Now, Workhorse has had another pullback. I picked up more shares. You know, ARK Invest is continuing to invest, and I don't see any reason why I shouldn't. I believe they will get a contract. They're the only EV one left, especially now since it's come out that Ford is no longer part of the Oshkosh bid. Oshkosh just took a Ford Transit and converted it. They bought a Ford Transit and converted it. So the main danger was the fact that Ford was experienced with government contracts. Now, that's no longer a danger. So I believe Workhorse will get a huge amount of this contract. And even if they don't, Workhorse are picking up contracts left, right and centre. They're in Bentley now. There's a Bentley Salem. So, you know, big C. No jokes please guys. I always say when Big C is below $80, it's worth buying. It's a competitor to Shopify. Some people prefer them to Shopify, and as I said, look at my previous videos to have a look at it. Salesforce, well, Salesforce, I said when it's at 220, you got to scoop it up. We all know they're buying Slack. They are acquiring shares in so many other companies. They're obviously looking to do another acquisition, maybe more. And I wouldn't be surprised if they picked up Dropbox, although I would rather Dropbox went on their own, in their own direction. I think they'd be more profitable. Now, one thing people are not talking about is Slack. Now, Slack are being bought for 27 billion. Yeah, they're at 24.3 billion. How is this not going up? No. Sorry about this. No. Walgreens Boots Alliance. Now, I always say below $40 is worth it. And it's almost 5% dividend yield. They own Walgreens, Boots, and the Alliance chain. Boots is the main pharmacy shop in UK and Europe, and of course Walgreens is the #1 pharmacy in the US. They will be giving out the Rona vaccine, and I had to decide between Rite Aid, CVS and WBA. Now CVS, I'll hold all three. CVS and Rite Aid, I think are good companies. I think WBA will be one that covers all bases. It's a value play, it's a dividend play, it's a recovery play. There's also talk about company wanting to buy Alliance for $27 billion. Was it 27? No, not 27 billion. Sorry, got my numbers mixed up. For $8 billion. And the funny thing is, Walgreens Boots Alliance own 27% of that company. So let's say I think they should take it, because then Walgreens Boots can put that money towards their pharmacy side, and then say for instance the other company, the Alliance, ends up going crazy, shooting up crazy. Once they're taken over, they still hold 27% of it. Now, if you remember, this company was going to be taken over for 70 billion not long ago. They're now half of that. So anyone who tells me they're not worth it, yeah, just remember that. Now, next one, and this is another one. People tell me, oh, it's not worth it. 7% dividend. Kcac dividend on the 8th of January. Now, they're under $30 a share. They're a 5G play. They're a streaming play. They're a sports play. They've got so many strings to their bow. They have high debt, yes, but if they sell DirecTV, they will get rid of a lot of that debt, and then they can use the money from DirecTV to either reinvest or to knock off a lot more of that debt. Thing is, HBO Max, Warner Brothers have just said all of their films for next year are going to be shown through HBO Max rather than in the cinemas, which will be huge for HBO Max. I think at these levels, it is worth it. Anyway, let me know what you think, and I'll see you in the next video.